navigating the tax landscape for employee incentives.
Good morning, everyone. Thank you for joining for this session. Today's panel is going to discuss a very important aspect in relation to top management attractiveness. So we will be discussing employee incentives and, most importantly, the tax complexities that go around these type of incentives. And with me to help with the discussion, I have Amandus Jabin, who is a Vice President Global Tax at Betsson AB. Betsson doesn't need any introduction because it's a very well-known organization within the gambling industry. And I also have Alberto Simoes, who is a director at Playhill, who are well-known in the Portuguese industry and also in the affiliate market industry. So to start with the discussion, we know that nowadays companies, as they expand globally and recruitment is becoming very difficult, it is important, or it is a no-brainer, that companies, organizations attract key candidates or retain key employees by providing or rolling out certain incentives or benefits. And it is sort of expected in order to retain this employment force. But one of the things that is important to keep in mind and is crucial is that while designing a package which is attractive and appealing for candidates and employees, the companies must keep in mind also the cost effectiveness, being compliant in different tax jurisdictions. So, Alberto, I come to you first. How important, and from your perspective, how can organizations roll out such incentive plans while having a well-designed package which attracts employees, but at the same time making sure that they are within budget, but at the same time they are compliant from a regulatory perspective, sustainable, and also keeping in mind the tax implications that surround such incentive?
Hi, thank you for having me. Thank you for the invitation. So regarding your question, so incentives plan, it's a broader term. It can include from profit sharing to sales commission to performance-based bonus to even other benefits. How to design one. I think you should look to the company first, the culture of the company. For example, I work at an affiliate. Our revenue is based on our performance. So the clients pay us based on our performance. So we try to reflect that in our workforce. So more than 90% of our employees are subject to incentive plan. Another thing that you should do is benchmark, try to see what your competitors are offering, try to replicate as you can, because in the end the person might not move from one company to the other because the other company offers certain benefits that you are not willing to offer. Then, and this is a mistake that we do many times, but you shouldn't do, is go locally. I know it's easy for companies that operate in more than one jurisdiction to try to create a framework and then apply that framework to every country in which they operate in. But the taxation, the social security contributions are different from country to another country. And in the end, you may end up offering to your employees a benefit they don't value because nobody in these jurisdictions offer this. In the other jurisdiction, everybody offers that. So at the same time, it's the same cost. So So how to manage the compliance, you have to have good local partners that can help you with that, and that's it. I think so.
Okay, so that's well and good, and in order to design an incentive package, it is very important, but there's also the tax aspect to it. So Amandus, we know that some companies can be caught off guard because they design a very attractive package, but sometimes the tax is not managed properly, tackled properly, or not even considered. And we have in our daily practices and within the industry, we find situations where we have organizations or employers asking us whether, for instance, a relocation bonus would be considered as subject to tax, or whether compensation given by an employer for relocation costs would be subject to tax. Or we have situations where employees are given an ex gratia payment, and the question is whether should it be declared in the pay slip, whether it should be subject to tax. And we are also seeing some trends nowadays with employees are given an award in the form of some sort of cryptocurrency or in the form of a token. So tax is very crucial. So from your perspective, how important it is to understand what are the tax implications? And do you see companies going into certain pitfalls when rolling out certain incentive plans?
Not sure, is this work? Yeah? Now
Yeah.
I can hear myself. That's good. Hi, everybody. Thank you for having me on the panel first.
You're welcome.
So I think that there's a few pitfalls that we see quite often. I think the three main ones that I see are either you drop your timing, you forget about timing, you have cross-border exposure that you're not recognizing, or you have operational reporting that you're missing out on. So basically the timing issue is obviously super crucial for anyone that's interested in receiving a proper, often equity-based incentive, because quite a few jurisdictions have a timing issue between when you're taxed and we actually receive the money. So understanding that, making sure that you're never taxed ahead of your financial gain, so to say, is a really important part of this. The other one is the cross-border issue, which is that, I mean, multiple jurisdiction, a lot of our employees are cross-border in many ways. We try to make sure they are in one jurisdiction only, but we have quite a few that are working out of multiple jurisdictions, and that leads to the risk of double taxation, quite a common one. And if you're not on top of your allocation in the different jurisdictions, your day tracking, very practical things like understanding how many days have you actually spent in the different jurisdictions, that turns into a big headache for you in hindsight. And then the operational reporting. I mean, a lot of these incentive programs that we build we're building them with a global idea. We want to achieve something from a global perspective. And it's so important to recognize that there's so many local requirements that you have to apply to. So you have to have a local idea or a global idea on how you're going to report this, but then you really need to anchor that in every jurisdiction that you might have contact with to ensure that it doesn't turn into an issue in hindsight, because you can break a beautiful incentive program simply by not being in control of those things.
And the classification is also important, because at face value you can have an incentive or a benefit that can be considered very similar to a salary, but when you look into the agreements that the employer and the employee go into, for instance, the terms and conditions, when the payment is going to be made, what type of benefit actually the employee is going to take, they're very crucial, important elements. And maybe also something to think about is the difference between an incentive which is long-term and the difference between an incentive which is short-term. So we have situations where employees are given bonuses on an occasional basis, but then, as you rightly mentioned, we have situations where employees are given stock options, for instance. So the trigger points might be whether at the point of issue, at the point of vesting, for instance, at the point of exercise. So from a Maltese perspective, generally if a stock option is given, then the trigger point would be at the point when the exercise is made by the employee. But we have different jurisdictions that ultimately tax at the different points in time. So in situations like, for instance, Betsson, I know that you operate globally, we can have situations where employees are working remotely, because nowadays you have a lot of people working remotely from home within the Maltese company. Or else, because of the expansion of the companies, you will have companies that are situated in different markets, but employees are employed there. And generally, from an HR perspective or from an employment law perspective, these employment incentives are rolled out similarly for each different jurisdiction. So how do you tackle situations where you have employees across the board? I mean, you need to take into consideration the legal aspect, but also the tax considerations.
I'm thinking you need to start from the other end, actually. You can't start, I said you need a global idea, yes. You need a global idea, but then you need to go down and understand which jurisdictions primarily am I going to be exposed to. And then based on that, you need to tweak your global idea. Because like the whole purpose of a good incentive program is that it pays out. It pays out maximum. That's the whole core of giving incentives, whichever form you give them. And if you fail that basic exercise of understanding how it actually plays out when you use it, then you forfeited the whole idea with it, I would say. And of course, you're gonna end up with things that aren't going to plan. You're gonna buy a company, and now you're in a new jurisdiction. You need to put another 10 people in the program, and it doesn't fit. At those times, I think you have to be really vigilant about whether it's a good idea to implement them in an old program, because there isn't a one-size-fits-all. You can actually create multiple programs to achieve roughly what you want to achieve with your programs. I mean, you shouldn't be scared of that.
So the idea is more see what are the implications in different jurisdictions and then roll out the program, rather than rolling out the program and then you see what are the implications.
I think that's really basic. Like you need to understand what you're about to do before you do it. It goes not just for incentive programs, goes for just about everything.
Because essentially it can be costly not only for the employees that are receiving the benefit, but also for the company that is awarding the benefit. So as we were saying, certain companies would have the obligation to register for tax purposes in multiple jurisdictions, and that can be one from a tax point of view because you're not honoring the obligation in those jurisdictions, but also costly from an operational point of view because you have the obligations to register, compliance, making sure that everything is reported correctly. So it is important to understand what are the implications, both locally for the companies which are operating locally, but also outside where you have workers in the different jurisdictions. Alberto, tying into this, we are also seeing that whoever works in the industry and who also touches with tax, that tax evolves, changes, and while you can say what happened, like I rolled out an incentive plan, which was issued 5 years ago, but will come into place within the next 2 years. And you had tackled the tax perspectives back then when you issued the incentive plan. How important it is that companies would keep abreast with the new tax regulations that come out and making sure that every year they're checking that everything is in place, that they are abiding by the statutory rules in the country where it comes to tax, social security, and also from a legal perspective.
Difficult question. So this year I've been working a lot with Brazil, which is always changing the rules, so I'm a bit traumatized about that. Is this something that all the companies have to do? Replying to your question, it's something that all the companies have to do. It's not an easy job to do. You can even ask your consultants to keep you up to date, but in the end it's really difficult to do. I think you have to have moments that you do an audit of what you have done and what is the legal framework at the new that date. But it is not an easy task to do, and it's not also a cheap task to do.
Amandus, any insights from your end?
Well, I think it's extremely costly not to be on top of it as well. You have to recognize that. And rules change. I mean, when you're looking at incentive programs, if I back up maybe 10 years, doing roughly the same thing that I'm doing now, we did an annual check of our programs. Now we have, like, every time something is triggered in a program, we do a new check. And that's just because so much is happening and it's so costly to be off. And I think, you know, what you were mentioning about the differences of rolling out the same program in different jurisdictions. We have had programs, you know, where the difference is 0 taxation for some, up to 60% personal income tax, and a 30% employer cost for paying it out as well. So if you're trying to find a netted and a sort of a program that pays out roughly the same to the individuals receiving it at roughly the same cost for the employer, you need to be vigilant and understand your local situations.
And sometimes we also see situations where we have, in one country, it might be more beneficial to retain the personnel as employees, but potentially in other countries it would be more beneficial to have them as consultants, for instance, or the employees themselves require that they get the incentives through a company in the other jurisdiction. So I think it's also important to see the balance from a tax perspective, but also how feasible it is from a company perspective and how much the employer is willing to go far to accommodate the needs of the employee. So from what we're discussing, I'm understanding that you can't see these employment incentives in a silo. So it's not an HR matter only. It has to be taken into consideration from a legal perspective, from a finance perspective, both for the company and also for the employee, but also from a tax perspective. In your line of work, so both Amandus and Alberto, how do you find it challenging? How do you tackle these situations where you need to work with other departments to ensure that whatever is being rolled out and what is being proposed as an attractive solution for the employees also works for the benefit of the company?
I wouldn't say it's more complicated than any other area to work together. So I think you just have to be clear on who owns you have to have one owner, and like I said, normally we would be 3 areas that would feed into this. So you would obviously have HR core competency in this, deciding how they want to sort of remunerate, and then you would have tax/finance to look at how we're doing it, like what are the obligations, and then you would have legal in there to ensure that whatever we're agreeing stands and is reasonable and is something that sort of covers us if something happens, if we go into new jurisdictions, if we have to let people go, what actually happens. So if you have those 3 areas in on this, I would say it's not like we have different competencies, so we're not stepping on each other's toes.
Exactly.
We just need to find ways to make sure we all understand each other, and then we're good, I think.
Yeah, it's basically that, is to have an owner of each incentive plan, and he has to make sure, if he's on the people team, he has to make sure that he spoke with the tax team and he spoke with the legal team, and there are no issues. Just one thing, you mentioned contractors. Sometimes we have to be careful if they are really contractors or they are employees and we say they are contractors.
Yeah.
Because that
100%.
There's a lot of tax issues, and people say, no, he's a contractor. He's really a contractor. You have to ask that question. And at the same time, you have to explain a lot of owners in the group that if someone on the legal say, not on the legal, on the IT say he's a contractor, that the legal has to see if he's really a contractor or if he is an employee, and we say that he is a contractor, because in the end you have a permanent establishment there.
But I think it's with contractors per se, like I mean, you can create incentive systems that allow for contractors in them as well. I mean, we have hybrid options versions, we have many sort of straight bonuses as well, just to make that work. So I think you just have to be vigilant on the core. Are we really talking about a consultant here? Because if not, the consequences can obviously be really big for the company. You can have a lot of costs that you didn't expect when someone comes knocking on the door questioning this, and you have 20 of those guys in one jurisdiction.
Exactly. So there is this concept of being a contractor on paper, but at the same time, you're still bound by the rules and obligations towards the company as if you are an employee, and certain jurisdictions would treat this as very similar to the being an employee, irrespective of what your employment agreement or your contractor agreement would say. And we've seen situations where, yes, on paper, they would be considered as a contractor, but then when it comes to termination, for instance, and they're discussing termination plans and termination incentives, and they go back and see this should have been treated as an employee. So what are the obligations of the company? They withhold the tax in relation to both salaries and also any incentives given to the employee? Were they supposed to do anything necessary on behalf of the employee, or was it only the employee who was responsible for paying the taxes in the different jurisdictions, etc.? So it is a very good point, and it's very important to keep in mind. Okay, so we're running short of time. Maybe some last comments in relation to this topic, and some opinions and advices to companies that are expanding and they're looking into opening in different jurisdictions or allowing remote workers working from different jurisdictions. What are your key takeaways when dealing with these type of rolling out incentives and the tax considerations?
So I would say have a global plan, have it locally anchored, and I mean, I'm a tax guy, so the most important thing is make sure you're not taxed before you're getting cash. Like, those are the core things that I would have. A system that covers those three, pretty good system.
I would say ask your employees what they want. Don't just design a plan inside the office, and then in the end the employees don't want that incentive plan. They are looking for something else.
Very good. Thank you for your insightful feedback, and thank you for joining us for this panel. I hope you enjoy the rest of the conference.
Thank you for everybody on.
Thank you so much to Joselyn and to your panel.